seem to have gotten over them. Thank you very much for joining. My name is Harry. I'm a commercial associate here at Rio, and this is the first in a series of webinars we're kind of planning to explain some kind of tricky sustainability concepts and have a sort of wider discussion. For a bit of a background on Rio, we're an AI-powered sustainability management platform, and helping you navigate the sort of, as we'll get into, increasingly complex sustainability regulatory landscape. And one of our central pillars is to make it more accessible without charging sort of massive fees. So what we'll do today is sort of give a quick background on the topic. Obviously today, as you can see on the screen, is CSRD. As a former accountant and sort of former financial services auditor, I'd come across a lot of complicated acronyms and opaque acronyms. The sustainability world seems to rival finance in that. So we'll look at that and then explore it in more detail and maybe some newer angles, with the thrust of that part today, potential application in the UK. So helping us translate that and being our sort of expert voice is going to be Luke O'Brien, Rio's CCO. Luke, welcome. Why don't you give yourself a bit of an introduction?
Yeah, thanks, Harry. Can you hear me okay?
Yeah, can you hear me? I should have checked
that. I can hear you fine, yeah. Everything's all good. So good to connect with everyone on the call today, and thanks very much for your time. I lead our commercial operations at Rio, been working with the organization for some time. Essentially, Harry's covered most of what our objective is, really to make sustainability more accessible to more companies across all verticals: infrastructure, the private sector, financial services, of course, and then the public sector, where we work with organizations as big as Whitehall departments through to local government. And so we are really active in this space, supporting on sustainability, helping all those types of organizations and businesses in the UK, across Europe, around the world, get to grips with what's material to them. So materiality is actually something that we will explore in depth. There's so much going on between the regulations, framework, standards. We've already covered some of it in a previous CSRD webinar. Today, we would like to talk more about that UK angle. And then, so just concluding then on my introduction, I've been working in sustainability for around 15 years, fully looking at that exact landscape, those types of organizations and businesses, helping range of stakeholders, internal, external, really understand, what does all this science from a sustainability actually mean when it comes to business strategy? How can you start looking at things like carbon emissions or diversity and inclusion or human rights or biodiversity, a whole host of environmental and social topics? What do they actually mean for organizations? How do you navigate that? How do you incorporate it into your executive decision-making, your business strategy, and of course, your annual reporting, which talks about your performance? So really looking forward to the time that we're going to spend together, and I'll hand back to you, Harry.
Yeah, thanks for that. And obviously, as our sustainability expert on the call, there is a Q&A box to the right, I think, on your screen. So if you've got any questions for Luke, if there's anything you want to pose to us, please drop it in. And also, I think this is being recorded. So if you found anything interesting, if you found any of the slides informative, please feel free to sort of send it to anyone else or watch again if there's anything that you missed the first time. So just as a very brief background to CSRD, what is it, why, how, when, that kind of stuff I'm going to cover at the start, and then we'll do a sort of longer form kind of discussion. But obviously CSRD is a directive, corporate sustainability reporting directive. It's been talked about in the EU space for a long time, and it's obviously a directive passed by the EU, so it has been implemented into law by all 27 EU member states, replacing the NFRD. The key feature is double materiality, really. That's something that is building on from the GRI's materiality assessment principle from 1999. And this is something that is going to impact companies in a huge way, because it's not only a way the environment affects their company, but it's also how their company affects sort of the broader society and the environment in its sort of usual course of business. The second point, as you can see on the screen, is ESRS, the Environmental Sustainability Reporting Standards. These are essentially the way in which CSRD will be fulfilled. They're the kind of what they hope to be a standardized reporting for sort of big and small companies alike, which is going to be the first kind of broader scope environmental standard, looking at not just sort of quantitative data, but all rungs of the ESG sort of ladder, and operationally up and downstream. The third part, which as a former auditor is very important, is the mandated sustainability assurance, because up until now it's been advised as sort of best practice, and ESOS does do a four yearly basis sort of audit, but from now on it's going to be mandated. So that should give credence to some of these statistics and some of the reports that are put out there, and hopefully in the same way that sort of financial statements are audited, give a sort of true and fair depiction of what's actually going on. And then lastly, just another point to the credence of the data, there's going to be repercussions for non-compliance. So companies will start to have to do this, and therefore there'll be no hiding anymore for sort of companies that can find tricky loopholes. Luke, is there anything that you think people miss maybe about what are the key things as CSRD?
I think that right now you've got a view that this comprehensive reporting directive is being released, that it's cumbersome, that it's bureaucratic, that it's very European. And I think that many around the world, many businesses, and I'm looking forward to taking a UK angle, would be wrong to see it as something that's going to go away. That might, just be a bit of a regulatory train wreck. Ultimately, what we're seeing when we talk to large consulting firms or large listed entities in the UK is that they need to comply because they have shares that are attractive to European investors, investment funds. Europe's a huge financial market. It's an aged, in many respects, wealth market. Asset managers and very complex types of financial products will need to regulatorily comply with looking at any type of stock, any holding that is kind of reporting against these standards in effect, at least the general requirements that you see ESRS 1 and 2. That is, looking at Dublin, looking at Luxembourg. If you're listing in those European Union exchanges, they are going to come some effect to looking at you in terms of your sustainability performance. So there's that regulatory side, that compliance side, that legal should be really all over, making sure that where they have investments in the company, and that is tying to the European Union, that they are at least across the cross-cutting standards compliant, and looking at the broader ESRS, ESG that you see on the left-hand side. What do those requirements look like? Is it sensible for the business to ignore, for example, climate change? I mean, that's just a de facto requirement now. Climate change isn't just regulated by the ESRS. There's interoperability with existing standards in the ISSB, the International Sustainability Standards Board. The UK specifically will have been one of the first countries in the G7 to endorse that standard and to ultimately require that view of, well, how are you managing climate risk? So there are many intersects, and that's just the basic compliance level that we're starting with. I think that all boards today need to be competent on what sustainability looks like, and we've seen that agenda really rocket from 2015 when the Paris Climate Accords were signed. And then right through to today, we were talking about biodiversity and actually, looking at a whole other conference of the parties around biodiversity in that respect as well. So I think it's important to, look at materiality in a new lens. It's not just financial or impact. It's, well, what does your business do? What's the supply chain? Where are you essentially reliant on global supply chains and understanding where other intermediaries are impacted? For example, even in that effect, there could be small, medium enterprise businesses in the European Union that you work with in your supply chain that are going to be heavily regulated by the CSRD, to the point that if they're spending so much time with procurement, refining policies for how they operate and buy from larger companies, or how they serve larger companies, where are you hit by that? And the likelihood is, if you're a G7 company constituent today, you are going to be impacted by this. So that's the kind of, almost, if you like, boring compliance angle that I'm a bit bored of talking about in the last, say, 6 years, because it's not really a driver and it's not really exciting. The bigger impact, I think, is that CSRD is so vastly comprehensive. You look at one of the climate change risk related requirements for data, and it's tell me what your transition plan is. And the transition planning task force is probably meriting its own webinar in itself, that's not just the tell me what your exposure is to climate risk in 2024. It's tell me how you are performing against last year and what you're going to do for the future. How are you transitioning? Your board might have put out a nice shiny net zero statement that's not going to hit for 30 plus years, but what are you actually doing to get there? And how are you using this detailed framework, which again is being talked to, kind of being incorporated into the ISSB alongside the biodiversity work that I've just mentioned. And so, you're seeing this sort of rolling compliance rate coming through. And then the kind of more exciting point I kind of teased to, and we'll come on to a bit later, is, well, actually, it does just make business sense to think about this in terms of, well, what will other countries, perhaps not the US, we see the UK versus the US is really kind of almost in the dark ages when it comes to regulation. The SEC still haven't signed off on a very simple Scope 1, Scope 2 greenhouse gas emissions disclosure regime, which is just staggering. Largest financial market, and it can't even mandate for having mandatory Scope 1 and Scope 2 emissions in SEC filing, and you're still talking about that 2-3 years on. I think there's a lot of pain for many businesses that just want that sort of security, certainty over what to do. But the point I'm making is, well, the UK has always been a leader in climate and sustainability, going back to 2007, 2008. And then the kind of the look across is the government change in the UK. You have Ed Miliband as the head of the Energy and Security Net Zero, almost secretariat now, or department ministry combined. It looks like it's going to turbocharge its level of authority. And that did introduce this Scope 1 to mandatory requirement in company law for UK entities. So will it end only on the ISSB view? Will it expand? Will it mimic elements of the CSRD? I mean, you have a huge shopping list of 1,000 data points, and you already have really a few years of providers in the technology and the consulting space looking at better ways to do double materiality. Come on to what that actually means. But this is the point. If you're sat today in a strategy role in any type of business, big or small, it probably would make sense to have a strong eye on what the requirements look like. How do you comply? How can you sort of see the wood for the trees? What would you do? Yeah. That'd be my overall sort of introduction to these standards in the UK angle.
Yeah, I think the breadth of both the compliance and the companies that are going to get hit is the kind of differentiated from maybe previous sustainability standards. So we've got obviously the reporting timeline up here. It's obviously going to be phased, and I won't read verbatim of the slides, but you can see SMEs are going to get impacted, probably the first time that they've had to do anything quite like this. So that just adds a whole new dimension to the who is going to get hit, and it is going to be these smaller companies, and they're going to have to start taking this seriously in a way that large companies have been doing for maybe the past 10 years. So yeah, I guess, and let's just move straight on to that potential application in the UK. So why does this matter, Luke? You can obviously read off the slides, but what are the key things that you think make this something that SME and large company managers alike should sit up and take notice of?
Yeah, I think it's a great point. I mean, ultimately, right now, you're likely impacted by the listing of shares if you're a large company, even a smaller company, because you still might be attracted to European asset manager. But then ultimately, these subsidiaries and the size is the impact. I just actually was wondering if we wanted to pivot. I see there's actually 3 questions come through that I might tailor an answer towards in the respective before we kick into the does it matter to the UK. So repercussions wise, there isn't, because it's European Union law, there isn't actually like a set penalty. It's for the member states in the European Union to transpose into their own law. I think roughly half have done that so far. France, no surprise, have put out a strong fine for directors if they don't comply at a company level, and actually a potential ban for being a director. So you can already see quite severe implications in terms of company law in France. France also being probably parallel to the UK in terms of its maturity around managing sustainability in terms of governance. So it's an interesting one to watch. I've been very surprised that Germany, Italy, other more contributing and sizable members of the European Union do not also take that suit, but it really is over to those national regulators rather than a European Union body to regulate it. The scope question that's just been raised it's because of trading. Well, absolutely, there is an element on trading, you know, undertaking collective investment transferable securities, alternative investment fund management directive, and then obviously the new sustainable finance disclosure regulation, which is really where CSRD has been brought through to create the data points for the asset managers and the banks, and then obviously within the insurance firms and private equity too, to look at, you know, what does comparable data represent for these types of holdings, and how you can compare them, and how you can actually address greenwashing indirect or direct. So whereas before, you know, you really have sustainability reporting is almost just sat with corporate affairs, a bit of a PR exercise. Some might say if they were a bit harsher. I may actually tend to agree with them, because it's not really much credibility behind, you know, most of the data that's gone out, versus what CSRD is trying to do, which is say, you know, give me comparable prepared metrics, give me not just greenhouse gas emissions, but tell me about climate risk. And TCFD was great at, you know, talking around scenario analysis and how you look at physical and transition risks, all things that you can do today. You can actually do it for free with Excel yourself if you wanted to. Obviously, if you're a huge business, that doesn't make any sense, because, you know, you really need to have that internal audit control over the data. Then you go to even more complex, you know, what does gender representation look like across those 27 countries outside of the EU as well? So there's a lot of complexities, whereas you really do need to think about how to control that information. So absolutely, CSRD is a EU directive, but if you are in North America, if you are in the UK, if you are in Japan, you are going to be impacted by CSRD, depending on the size of the company. Obviously, sub 10, 100 million revenue business likely is not going to have as huge a problem, but FTSE, yes, absolutely. And then kind of climbing into the 350s is worth looking at.
I mean, I guess, sorry to interrupt, but
yeah.
Can you see something similar to the CSRD being brought into the UK anytime soon? Obviously, I think what has happened here is a lot of standardization. People have made a move in the last 5 to 10 years to standardize things, as opposed to going alone unilaterally. Obviously, in financial reporting, IFRS is the kind of standard bearer. Can you see, because it's kind of the first of this broad sort of regulation, can you see that being standardized in the UK in the next 10 years?
Well, that's the point. So IFRS has already had the ISSB standards on how you approach materiality, how you approach climate endorsed in the UK. So your sustainability disclosures regime is already through in the UK. You know, that's going to come through into company law. I think the question is, that was a Conservative Rishi Sunak government endorsement. I imagine that the existing Labour government, you know, don't see any need to withdraw from that. But my speculation, if you like, is really going to that earlier point. If we were already the first, almost nearly 16, 17 years ago, to bring in greenhouse gas emissions reporting, I don't see why we would be stopping at looking at the European Union and going to their level, if not further, particularly if it's going to make, you know, large FTSE 350 businesses, you know, reporting lives easier, because they're going to see, you know, I'm doing it anyway for European Union requirements, why would I not for the UK? So I think it's too early to say for sure, but at the same time, this is a blueprint in terms of sustainability reporting. This is giving clarity. It's an absolute bureaucratic nightmare. The comparison is really 2010 Markets and Financial Instruments Directive 2 brought through. You know, I think every single person who works in financial services saw, you know, 10-year, multi-100 million pound engagements on business change taking place. This is a similar lift in terms of the regulation that's coming through.
Yeah. And what does that mean for SMEs? I mean, talk about multi-million pound sort of lift. How able are these smaller companies to sort of address some of the questions and maybe get ahead of the game that they might need to? Like, how possible is it for those companies, without maybe the resources of the large companies, to actually meet these demands?
I think if you pay, I mean, I look at doing a materiality assessment at a Big Four, maybe at the start of my career, and you probably paid like 10k for it as a FTSE business, and I think there's more zeros added onto that now because the market demand is greater and there's less people that can do it. So I think that the temptation to employ a consultant that's worked in sustainability and financial services or financial reporting is high, make the pain go away, but I think that's temporary. And I think that ultimately you're going to pay for one-off exercise that's not replicable. When reality is, you need to kind of look at this almost like a new type of financial reporting. Well, that's what it is. It's non-financial reporting, but it's bolstered we've had European Union-led non-financial reporting through the EU non-financial reporting directive, which CSRD is replacing. I did those exercises for a large FTSE company, get some KPIs, get some policies, look like it's a hygiene factor, everything's great. It's not really regulated and it's not really feeding through to financial statements and that comparability. If you look at asset managers today, they're looking at high-performing stocks on financial statements. It's quite likely they're going to be looking at high-performing stocks if they want to talk about having a sustainability fund, a green fund, an impact fund, and have to have this type of reporting beside it. And that's actually not speculation now, because we know that there was huge work by the FCA in the UK around the sustainability disclosures regime to mimic the sustainable finance disclosure regulation from the European Union and actually surpass it in terms of clarity to asset managers. So that is a enforced regulation now, led by the FCA. Sacha Sedan's work really has been quite strong in terms of putting the UK in financial markets as saying, you can't go to market with a product and call it green and then have a private jet company within it. I mean, where's the complete sort of atrocious irony not called out that you're really fueling a lot of these problems, but then this private jet company, for example, I wouldn't name names of the asset manager, but they do have a climate fund that's called, a kind of a new climate fund, and it's got a private jet as one of the top 10 holdings in it. And you think, well, where's the irony there? What does that private jet company actually do? Is it just got a policy? Has it got a net zero decarbonisation statement? Sorry, Harry.
No, Sally makes a good point in the chat, because obviously ISSB doesn't include that double materiality. Is that where perhaps some of those sort of private jets,
exactly,
really
exactly,
sort of
the impact,
duplicitous sort of statements, is that where that's going to get hit?
Exactly. It's double materiality, and we've got a whole Rio sort of team. We'll come on to it, but we've got a whole Rio team perspective around. You've got impact materiality. So let's assess if it's financially material first. From that, now you need to do the due diligence and talk about the impact. And that impact does become very subjective and it's difficult. And you do need to rely on expertise such as from waste management, circular economy, water specialists, climate specialists, biodiversity specialists, let alone thinking about the human capital side of things. People who know how to measure human rights in line with the UN human rights requirements, and then also on modern slavery, including gender pay. You think about all of these sort of perfect storm coming together. Like, absolutely, the impact side requires the thought, it requires the diligence, it needs to have science overlaid it, and you need to use technology in respect of measuring and monitoring that. We've had engagement teams perform that exercise in Excel before. That's what's informed our product strategy to automate this. That's why we want to take an AI-driven approach to support businesses with it, so that they're not paying hundreds of thousands of pounds every year, and they're paying much, much lower than that. But yes, simply put, to answer the question, ISSP is only financial materiality. It's only saying, will I know if this has a financial impact, versus the impact that I'm actually having, and how do I manage that impact, which is the more thorny aspect. Great way to look at it. And absolutely, I know UK fund. I mean, I look at a large, interesting German asset manager that's been dragged through the mud. I mean, many other American ones have as well, and many global ones too, but they all put forward when SFDR came out that they had these green impact, etc. funds, only to then the year after withdraw the percentage of the funds which were aligned to those types of leading sustainability regimes, because you realize actually they're really not, and there's no real way to prove that. And so it's it's like, also, I think we take the blame out of it as well, right? I don't think there's sort of big bad capitalism at play here, and it's disingenuous. I think it's actually more indirect greenwashing. It's people that aren't educated on sustainability, that are joining these sort of cross-cutting governance committees that are trying to do the best with limited resources. I don't think it's possible to take any company today, particularly from the Fortune 500 base, and go honestly to shareholders, prospective shareholders, and say, I've managed net zero. I've managed everything to do with what my material sustainability issues are. I find that really improbable because of the sort of the size of those enterprises. If you look at a group structure, how can they know? If you look at outside of the G7 and financial reporting alone, outside the G7, we know financial reporting is often terrible. And so that's in the G20. So you look at emerging markets, Argentina, India, China, Indonesia, you see how difficult auditors have on the financial side to get that comfort. And that's why we have materiality just in that simple term for getting statements, let alone on these higher hitting sustainability topics.
I suppose that kind of raises the question, which industries, like you mentioned, the kind of the third one, the developing world being less sort of tuned to the financial side. Obviously, retail, some of the industries that might be hit hardest by these kind of downstream, upstream questions, like retail, fashion, are probably one of those where they're going to have some real questions. How do they validate what's going on upstream in their sort of factories?
Yeah, exactly. And I think there are so many unknowns. And another point they're made around power and water consumption for artificial intelligence. Really like great point for tech generally. I mean, we're doing a panel in a couple of weeks' time, speaking to mostly data scientists from asset management and also the tech sector. And me and the team are looking into that side. What do firms like Meta, AWS, Alphabet, etc. have in respect of managing their true and Apple, of course, their true sort of use of data and the ethics around it. And ethics itself actually is an incredible topic, which we've seen really grow in respect of actually what is ethical to do and how do you regulate ethics and how does that vary from region to region. So then not alone also the environmental elements of that question around AI in general and where blame lies. I think actually also just to reiterate that point I made, I don't actually think there's blame anywhere really. I think we have to look at this as like a 30-40 year problem, perhaps a 100-year problem. You look at the Industrial Revolution, which has really sparked a lot of this, that we are super dependent on fossil fuel. I don't think that there's any fairness in blaming fossil fuel. In fact, working with that extractive industry is critical. We have such a just-in-time economy that we are all reliant on fossil fuel. It's responsible for 75% of our emissions. I don't think it makes any sense to in any way say one sector is more proportionately better at managing sustainability than the other. I think everyone is in the same boat, if you like, in respect of trying to understand what these problems look like.
Yeah, no, that's a good point. We're getting to the end. So if you've got any questions, please whack them in the box before we finish. I think we'll do another 5-10 minutes, see how we go. But if there's any questions you can think of, whack them in now and we can go. I suppose that for, I guess, bringing it back to the UK perspective, why you mentioned it's kind of not a 10-year problem, it's maybe a 30, 40, 50-year problem. Why should companies start looking at it now rather than putting it off for another 10 years? Why should they not delay and start working now, or should they?
Well, I think it's investment, number one. I think investment is going to be the main driver. Financial services have really led most of this discourse to date, and I think that attraction of capital, where we work with companies who don't have a mature sustainability strategy, or they have the most mature. This is the common theme. It's an investor has asked, what is the sustainability policy of your organization? What KPIs, quantitative and qualitative, are you using to measure? How are you reporting against it? And that's a very clear element. And in that due diligence cycle that comes through, we've just seen those questionnaires just completely skyrocket in the last few years. So really, the investor angle, the financial services angle, either by attracting money or trying to borrow money or even being insured. Financial services, I think, is at the core for this change. And that's why you have that long-term view. It's fiduciary duty, it's stewardship, it's the long-term sort of reinvention of sustainability in that respect. So I think that's kind of why you have to take that long-term strategy. Second, if you look at most of the FTSE companies on the stock exchange today, how many are over 100 years old? Quite a lot actually, and have gone through many changes, and also within that Fortune 500 base. So we're kind of no longer in the industrial revolution, we're in the technological revolution. And so how do you keep pace with those sort of higher performing stocks? What are they doing? And how do you have that view for that long-term kind of principle? And then lastly, actually, it's not as difficult to kind of understand what's going on here. Yes, it is if you've spent your whole life not working in sustainability. So what we have to do is scale that small pool of sustainability specialism and make sure that it's able to be accessed, not just by larger companies, but by smaller companies and medium-sized companies too.
Yeah. Dan just asked a final question. Maybe we'll Do you think it will be like a control C, control V? Do you think they'll just implement it, or is it going to be slightly more nuanced? Obviously, the point around it was to create a standard that could be harmonized around the world. So does it make more sense to do it just copy and paste, or what do you think?
I think it's the point that was covered in the beginning, that it would make sense if I was a business today to look at what the CSRD is asking. Appreciate that the UK was the world first for company law to mandate on company disclosure of greenhouse gas emissions. Look at the person that introduced that being Ed Miliband, back 15, 16 years ago, as now the main authority voice in government on sustainability. And I wouldn't want to put anything else out other than a suspicion. But I would say it's a very educated suspicion that it's quite likely CSRD to some degree is going to be enacted in the UK company law. It would really need to be just beyond trying to help the UK achieve its net zero ambitions. But you look at things like the Social Value Act, we have that there. There's a whole host of requirements. Stock exchanges try to make themselves more competitive as well. At company law, GHG emissions, when I worked at a Big Four, that was one of the reasons why many sort of non-G7 companies wanted to list on the London Stock Exchange, because they knew the reputation regarding that sort of scrutiny around getting an assurance statement over your company's reporting on sustainability or greenhouse gas emissions. So yes, I do think it is going to happen on a personal, professional level. But I think it also probably looks at that broader ISSB already being endorsed, the FCA already bringing in a sustainability disclosure regime, matching, if not surpassing, the EU's sustainable finance disclosure regime.
Yeah, I mean, maybe it's a good point to end on. Just talk to what Rio can do for these kind of companies. Obviously, we've got a sustainability platform. Do you want to just address a few of those points? How we can help you?
Happy to. Just wanted to touch on Michael's question. So, how is CSRD expected to improve internal transparency for companies, asset managers, for investor relations, and differentiating operational versus commercial performance? I think that's kind of critical here. Is that we've now seen the turning point that it is to do with cost optimization. What are the ways to benefit financially from sustainability objectives? This isn't just a kind of a nice to have to look like your business is responsible and doing good. That responsible business era is hopefully now gone. We're talking about sustainability no longer as a buzzword. We're talking about it being, I'm a company, I'm a private company today. If I'm starting out and I'm 5, 10, 500, 1,000 employees, I should really be thinking about what are the quick wins that can be made in terms of sustainability, from energy to emissions, right through to my diversity, human rights policies, etc., my governance, my tax transparency. These should all be very easy to implement in the very beginning. It's actually the larger businesses that I imagine will retrospectively suffer from having to bring in those policies, because their supply chains go maybe across 100 countries, and they don't really have more than group structure to local country of operations, and that in itself, that financial reporting problem is there too. But in terms of what you just asked about how we can help, so we take an AI-driven approach to automating the CSRD ESRS standards. Simply put, what that means is we have the ability to take your ISIN, your NACE, your NAICS, whatever your nomenclature is for your financial representation in the traditional sort of holdings view for analysts, and we can say, well, what does the group structure look like? What do all the other industries look like? It's quite likely that XYZ are financially material to you. We have a sustainability accounting standards board that's been around for nearly 20 plus years. That's broadly gone into the International Sustainability Standards Board in terms of how to navigate, in terms of how to look at materiality, but it only cuts off at climate. So we go further and we give you a shorter list to start. Then we also conduct an analysis using the CSRD requirements and where we see the sectors being impacted. Thanks, Harry, that shows you that kind of view. And so we're mapping out more of what we think is material, but we're using our tech to support with this exercise. So with Rio, you have consultants that are leading and being that face to you, but in the background, our AI platform is supporting with that navigation of all of these many KPIs, quantitative, that you need to kind of report on, but then also looking at that materiality side of things. So what is doubly material? What is the impact of these other issues? How can we consolidate that list? Finally, that leads to discussions across the business, CFO, financial controller, head of risk, compliance, legal, and then the product. What is your actual product? how is that product going to be impacted? On the supply chain, facilities management, all of those different types of stakeholders are also included. And you're having that final kind of discussion around, well, this is what your materiality looks like. You can have mergers and acquisitions relatively come through in terms of where you maybe entered into a new market, exited a market, and revise that assessment annually to support with your reporting. And that's where we'd validate it. And then just looking at that very final question there from Mike. How can AI produce reliable reports when base data is on the whole incomplete and poor quality? So I think this is the point, is that AI is not producing the report. The company still needs to collect the data, but it will have used AI to navigate what is the material issue. So for example, is water consumption material for every single business? We already see this with emissions and financed emissions. You see this operational level for a financial entity, and then you see the product. And pretty much all of those financial services businesses, where they sit in an office, it's not material, it's their products and their services that they operate around the world that are material. So it's quite easy to say, I've got 10 buildings that my staff work in, and I've got a private jet. This is what the emission statement looks like. But actually, if I'm sitting financing debt investments in all of the top 10 fossil fuel holdings around the world, is that not more material? It's a very simple way to look at it. In textiles, it's the same. So you look at a FTSE 100 retailer in fashion, they're sitting saying water is not material to them, but actually, they're taking dirty cotton, which has got incredible amounts of water use throughout it, and the supply chain across emerging markets. How do they navigate water, and then how is water more material to them versus, for example, that financial services example that I've just given? So absolutely, data is poor, but the point is not to use AI to give you data or to estimate data. It's to structure your time so that you're not spending it all on trying to navigate the regulation. You're allowed to then define what the KPIs look like and how you're going to collect them. And then ultimately, you can then, over time, use AI to better improve that collection process.
Yeah, I guess it gives you that sort of priority. What should I be thinking about first and foremost, and then you can move on to everything else as and when you get it. I think that's everything. And Luke, unless you've got everything else to say, I think that was a really good discussion.
Yeah, I think it is. I think ultimately the point is we've got such a unique view from working in different types of sectors and industry segments. Infrastructure and financial services, where we've worked the most in the last few quarters around supporting those types of built environment or large scale extractive industries or broader kind of construction and infrastructure. These are on the front line. These need to really quite readily understand what this looks like right now. And on the flip, financial services do too. And so what we're finding is the credibility behind the statements that we're putting out is where the nervousness lies. And then the auditors, and this is the point as well we've not really come to, are going to be looking through these in really granular form. And we do know that those types of traditional financial audit firms are gearing up for this sort of new wave of audit disclosure in terms of how they apply those traditional accounting principles to sustainability data. So that really is where we're seeing the turning point. This is no longer a group corporate affairs topic. It might not even be the CFO as a topic. It's a broad group of the business strategy. The board, the CEO need to own and understand what's going on, because before you probably had many statements going out into the market. I mean, I would actually caution most of those reports to maybe get their general counsel comfortable with what they've said in them, because they are used by investors to understand performance, even if they weren't heavily regulated. And so the litigation risk side is so high. That's where we're seeing kind of most of those sort of former environmental law practices kind of gear up to kind of look at what materiality looks like and how to move forward. So realistically, the points that we've concluded on are: it's huge, it's cumbersome, it's going to impact you no matter where you are in the world, if you're in the G7 or the European Union. You don't need to think that it's insurmountable. It definitely can be supported by expertise and technology, and that's how I would leave it.
Yeah, I mean, there's so many points around it. It feels like we've covered a lot, but also there's a lot of gaps that we can still do. This is obviously a series of webinars. This was the first one. We hope to do other topics, and please, if you've got any suggestions, please feel free to put them in. We'll have a look, and we've got some ideas in the pipeline and some expert guests we can maybe call upon, as well as Luke. So I just want to say thank you very much for joining, and do follow us on LinkedIn. And if you've got any questions around CSRD, any problems that you or your company want to solve, please feel free to reach out, and we'd be more than happy to set up a demo, set up a chat, just like an introductory chat, just to see where you are, what you need to do. Rio can support you on that. Thank you very much for joining, and have a good day. I think we're finished.